Once again, growth has begun the year on a bit of a weak footing, but we're seeing some interesting sort of regional patterns within that. So the US economy has had another slow winter quarter, which is sort of bringing growth forecasts down for the United States. Also, China began the year quite weakly, which is bringing about monetary policy stimulus. On the other hand, Europe has been sort of stronger than anticipated, and also seeing quite a lot of strength in India. So there are a few things going on. One is the hit to energy prices has caused a really big pullback in energy investment. Second, the US has suffered from yet another really bad winter weather-wise, which has been damaging things like consumer spending. Third, it may well be that there are some problems that the authorities are having adjusting for seasonal effects. So all that sort of combines to bring about a very soft start to the year. What we're expecting is that to rebound through the rest of the year. So Q2 should be better and the second half of the year even stronger. So in absolute terms, Europe is still a bit weaker than the United States, but it has been improving. There are a few things going on. One is monetary policy really is much more stimulative now, and that does seem to have encouraged stronger activity. Second, Europe really unambiguously benefits from weaker oil prices, and so retail trade, auto sales have been growing well. Third, the exchange rate's fallen quite a lot, which is helping the export sector. So sort of like a perfect storm coming together for the Eurozone at the moment. The big worry on the horizon is Greece. So if Greece were to fall over, were to default and exit the Eurozone, that could be one risk going forward, but otherwise a solid recovery is in train. So in China, the industrial sector is under quite a lot of pressure at the moment. Property activity's been on a downward trend. Also, sort of heavy industrial activity, partly because the Chinese currency has been appreciating, but partly because of overcapacity problems. So they're trying to rebalance the economy, but it's a slow process, which is why policies are easing quite aggressively at the moment. So we expect growth to hold up okay, but be on a sort of a downward gliding trend over the next few years. Yeah, so India in some ways is the opposite of China. Alright, so Chinese growth for a long time had been a lot stronger than Indian growth, but now we have a new government in place, is undertaking some structural reform. Inflation's been coming down, which is allowing monetary policy to ease. Also, India is another country that benefits quite a lot from lower oil prices. So again, a number of things coming together to help provide a cyclical boost to Indian activity.